Well, good morning, everybody, and welcome to our Monday morning market review for GoPro Trading Academy, and held, as always, by yours truly, Yen Giffen. So I hope you guys had a fabulous weekend, that you're all keeping safe in these troubled times, especially those of you who are in the hotspots. It's certainly a challenging time for us, so stay at home, stay safe, and lots of time for you to spend in front of your charts and learn this amazing way of technical analysis using advanced price action and getting these strategies under the belt. So if you've got any questions, folks, as always, please do drop them into the chat box. And if you are watching this as a recording, then you're welcome to ask your question in the comments and I'll get back to you. And if you're not yet subscribed to our channel on YouTube, please make sure that you do go there and subscribe. We're going to be doing more and more training that will be purely visible in YouTube in the future. Okay, so as always, let's start with Euro USD, but I suppose before I do that, just a quick comment on Friday's non-farm payroll. 2 months in a row now where we've had a bit of, well, I don't want to call it bad luck, but where the non-farm payroll announcement has kind of put a spanner in the works for any existing market direction. So the month before, obviously, we had a significant reversal. And now exactly the opposite direction has been taken again. So it's really just on a higher time frame showing choppy behavior. But last month, as I mentioned previously, last week in our trading, we did have some really good lower time frame opportunities. I think 2 of the weeks were pretty good. The other 2 were a bit scrappy. But it was an okay month in the end, reasonably quiet overall. And with the sort of the any market direction or charts that did have some directional bias beforehand coming to a halt on Friday, at least a temporary halt, we kind of sitting on our hands again, it seems. But let's run through the charts and have a look and see if there's anything available to us. I would say that the dual time frame overlay that I've been testing actually did really well. So for those of you who are going to be attending the boot camp with me next week, you're going to be learning all about that, or at least learning where we are at with that at the moment. So if you're not already subscribed to the boot camp, then please make sure that you do. It's going to be a fabulous 3 days of intensive study and analysis and trading, insofar as the valid trades are open to us. But I will also be teaching you guys some of the new stuff that we've been developing, or at least showing you what it is and giving you an opportunity to get on board with that as well. All right, so here's Euro USD on the daily time frame, and really this is representative of what I just said. And it's interesting how in fact it just failed to give us an impulse wave on this. So just to have a look at the exact price levels, the low of that preceding bearish wave that came after the FOMC announcement during the course of the last month was 1.20276 at 27.6, and our lowest close here was 48.4. So you can see it was about 20 pips higher. So we failed to get a lower close. Now, admittedly, this is not yet ringed, this low. I'm not saying that it will necessarily be ringed, but the odds seem to be in favor of it being ringed. Not much happening today, of course. So I'm not making that assumption necessarily, which of course why I've still got this bearish wave intact. But it is very possible that this will be ringed, which means that this potential trend, and it is still a potential trend after that initial breakout, is going to technically be, if that happens, will be technically be a false breakout. So bit of a shame. Like I say, you know, I'd like to look at our pairs performing solidly over time. But the fact of the matter is, as you know, with core strategies, we rely on a certain type of market condition where there's high quality price movement, and our technical analysis skill set allows us to very clearly differentiate between the two. So we do not actually get involved in markets where there is not a high quality price movement. So just looking quickly at the H4, we did have a couple of H4 impulse trades. I think those of you on the Funded Trader program, we had our training on Thursday evening. We're talking about this. But yeah, the hybrid trade obviously didn't get quite to its take profit so far in any case. We did have a very nice 6-1 winner on standard targeting for a H4 impulse. And if you were using advanced targeting, I think you would have probably got about the same out of that. The next setup that you would have got potentially out of this after a pullback was this one over here. And of course, that doesn't seem like it's working out. 1, 2, 3, 4, 5, 6. Yeah, that actually would have been stopped out already. That definitely didn't work. I think that actually didn't work immediately. So yeah, well, that's kind of where we're at. We didn't do anything on Friday, obviously, with non-farm payroll. Although technically there might have been some other setups. So reasonably okay. You know, this bearish run over here, Euro USD is not the best of those. But as always, if you're just looking at the daily impulse, you know, if you've got a 6-1 or 5-1 winner, and then even a full stop loss over here, we're very happy with that. 50% success ratio with an average reward to risk ratio of around 3-4-1 across those two trades. I don't think you're going to be complaining, are you? So that's the nature of these types of strategies, where you can win even less than half of the trades and still be very profitable. Just a quick look at weekly, of course, deep inside the channel. So nothing really doing for us there. But it is, I guess, worth pointing out that last week on Friday, it failed to give us that impulse candle as a result of non-farms. But this bearish wave is still very much intact for now. Right, so cable, you can see we did get a bearish impulse wave here on daily. It did give us a lower low, lower close, but Friday's non-farm payroll being a bullish engulfing candle, and today definitely showing that that low is going to be ringed. So unless today actually makes a lower low, this is going to be a ringed low. So that does mean, however, that as far as this pair is concerned, because we do have now an established trend here, although it is now weak with an inside close inside the previous phase 2 or corrective waves price territory, it is weak. It has failed to respect what was support as resistance. So yeah, that is obviously not boding well for us to be able to continue to trade this at the moment anyway. I'm also going to be just talking about, you know, the more a sort of not a too conservative or too aggressive approach when it comes to the filtering that we've spoken about and that you guys should now be familiar with. So if we have an intact trend where we are inside of the channel, you know, we will treat that as weak. But I'm not necessarily going to be looking for outside C closes. So, I mean, we did have an outside C close here. So this was also very nice to trade last week for the H4 impulse. But by definition, now that this wave has come back inside this, any potential C or future C close over here is going to be an inside C close. Already, you know that. So, but last week we did have a nice outside C close. And here you can see the couple of the trades. There was the hybrid. Again, I mean, obviously, if you'd be using this as a, for those of you who would be looking at anything hybrid, you'd potentially be using a trailing stop on that as well. So it would have been quite a nice win. But the standard targeting was also a decent win on this as well. So the only other potential trade we would have had after that is here, which of course we didn't take because of non-farms. So if you were trading non-farms, you would have been stopped out on that one. And remember, that's not necessarily a bad thing, especially if you're trading advanced targeting. All right, so also just looking quickly at weekly, very much inside of that channel. Right, so on dollar yen, we had the breakout last week on Thursday, and then Friday non-farm coming back inside of, well, certainly coming back inside of the 3-wave channel. At the moment, we are still outside of our 4-wave channel, so do bear that in mind. But that's at the moment. Let's see what happens. If it carries on any further and closes much lower, it's going to be closing back inside of the channel. This is technically an established trend with a second impulse wave, but weakness. So we do not have an outside C close for those of you who are looking for that. But if you weren't, then here was the H4 impulse, which got stopped out on Friday post, well, yeah, just after I think the non-farm payroll announcement, for a small loss. So, you know, if your initial risk was down here, that's about 20% of the original risk that you took. So a small loser on that one, which is fair enough. And that's a trade certainly that we did take because the entry was sufficiently in advance of non-farm, so we were able to reduce our open risk on that substantially. All right, so dollar Swiss, same thing, pulled back, but in this case, pulled right back inside of both channels. Nothing doing here, just because we had that additional wave with that just a slightly higher high here. That does happen sometimes. Otherwise, this picture would have looked somewhat different. But that's okay because you know, we can't trade all of these, otherwise we'd be overexposing ourselves to a single currency, in this case US dollar. But yeah, certainly we did have that breakout last week as well, and I don't think we took anything on this. And of course, you know, subsequent to that, non-farms brought us straight back inside. Had you looked to trade anything here, the first time would have been on that day. And looking for an impulse post pullback, yes, certainly that would have been it there, but it also would have stopped up pretty quickly. So these are definitely not the best pairs to trade, as you can see. Like for instance, the cable was much nicer, and there are a few others that you'll see were okay for last week as well. All right, so USD Cad, likewise, you know, last week nothing inside of the channel, so we didn't do anything there at all. And yeah, I don't think we saw any possibility to trade on this for overlays at all. I think we did have a hybrid. Yes, that was definitely would have been a hybrid, but that didn't quite get to take profit. But you would have used we take it out on a trailing stop on that. Aussie and Kiwi, I think, gave us some nice trading conditions, similar to cable, very similar picture with an impulse wave and therefore an established trend on this one. So, and then with a bullish impulse candle, you can see I've already drawn in this additional bullish wave over here, sort of not quite jumping the gun, but I think it's okay. We'll definitely have that as a ring low. And yeah, you can see again, we had this discussion for the funded trader members on Thursday evening, but the different possibilities for entry over here, starting with hybrid one, which would you know, very early possibility. There wasn't really a valid hybrid. This was a first valid hybrid. Didn't look at a deeper target on that. Very nice standard. This was the first standard H4 impulse with again 5 or 6 to 1 reward to risk ratio, ultimately hitting take profit and immediately getting another setup to short the market as soon as we just hit that take profit. That candle that hit the take profit, if you're using standard targeting, gave another entry shortly after that. And then, of course, that didn't make it to the take profit because we got taken out for a very, very small, basically almost a break-even trade on this one. So yeah, that all seemed to work out just fine as far as we're concerned. Nicely profitable. So you can actually see, if you just look at that and the euro trade, it basically covered all these other more scrappy trades. Here's Kiwi, last of our majors and minors. Similar picture. That's the hybrid. That's the first daily impulse. And if you were using standard targeting, great. If you were using advanced targeting, likewise, you would have actually been taken out there. So yeah, standard targeting would have hit take profit on that. So another nice winner, not quite as big a reward to risk ratio, just under 3 to 1 reward to risk ratio. So still very decent, still very, very decent. So there you can see, you know, across, sorry, GBP, yeah, so cable, Aussie and Kiwi, if you just look at those winners on that, they were extremely profitable, good reward to risk ratios that covered quite a few of those other trades which did not work out. And that's convexity, folks. That's convexity at work. All right, so right here we have, excuse me, Euro Yen. Did have a question on this regarding hybrid trade, which was a valid question, but for the purposes of our market review this morning, nothing doing on this. But interesting that we did have in this bearish retracement wave for phase 2 on weekly, which has got its cyclicity on daily. That cyclicity broke down last week. It's obviously also now starting to chop around quite a lot thanks to non-farms again. But yeah, it's interesting that that cyclicity did break down. So choppy, as I said, from one end of 1 month to the end of the next month, we had 2 completely different reactions to non-farm payrolls in terms of direction. So it's just causing a bit of chop on the higher time frames. Other yen pairs, similar picture there you can see. I haven't updated all of the analysis on this, as you can see, but it's really just getting tighter and tighter. It's just a descending, it's just a triangle basically. So we're also not interested in this daily impulse at all because we had that inside close almost a month ago. But technically, remember, this is still a trend. So if you're not worrying about C closes, the fact that we are now outside of, and were the whole of last week outside of this channel, meant that potentially those of you who don't require an outside C close could have been looking at this for a hybrid, but we couldn't be taking any daily impulse trades on this because this is still a phase 2. So as soon as we and if you are using the impulse, I beg your pardon, if you are using the inside candle as valid conditions, though, then you may well be looking for an entry during the course of this week for daily. But it really is going sideways overall. Swiss yen, same kind of picture. You can see why I group the yen pairs together, because there is so much correlation between them. You can see that they look very similar, don't they? And very much inside of the channel there on the weekly. So that one is an absolute no-no for daily trades. And another similar picture. This is obviously outside of the channel, showing decent strength. Let me just check the close on this again. So close 38.9 high. Yep, so this is an outside C close by about 8 pips. And then, of course, we've got that bullish. So technically, as at the end of the previous week, as we discussed a week ago, this is still a phase 2. If you are treating the inside bar as the start of the next impulse wave, then you would be now looking this week for an impulse candle post a pullback. So obviously we didn't get that last week. Neither of these is an impulse candle. And regardless, even if that had been an impulse candle, is it post a pullback? So that's what we'd be looking for is an impulse candle after a pullback on this one. So yeah, do keep an eye out for that. Aussie Yen, again, here we can see this is obviously looking more bearish on this time frame. Just looking quickly at weekly, you'll see that it's very much respected that resistance level over the last couple of months. And last week, nothing special here, but we can see that there was a breakdown in that bearish cyclicity here as well. So once again, that's just kind of put a spanner in terms of being able to trade that one at all. We did get some trades on this as well. So let me just look at Kiwi Yen as well. Same kind of picture, but in that bearish movement last week, there were these H4 impulse trades. So here you can see again a winner and basically a break-even loser, if you like. So if I just go back quickly to Aussie Yen, you'll see that there was a similar picture here. This was a bit better because we had 2 winners on this one. We also had an overlay on this, which was a winner. So I think we had a loser and a winner on overlay, but 2 winning H4 impulse trades on Aussie Yen. So you recall last week we were chatting about the fact that the phase 2 from the previous week potentially may have run its course, and as it happened, that's exactly what happened. So it gave us plenty of H4 impulse trades through the course of last week. Not all of them winning, certainly not, but convexity, as always, bringing us out with a very decent week's trading. All right, Euro GBP, moving on to the Euro crosses. This has been dead in the water for quite some time, so nothing really to talk about here. So 1, 2, 3, 4, 5. Yeah, so I spoke about that before. Don't want to repeat myself from last week. The one thing we can say is this very gentle downward movement over here, which is basically sideways, but technically it's a bearish wave. Was over last week with a ring low, so that's the only thing we can say about that. Euro Swiss, never really interested in this particularly. Did get a small winner overlay if you were trading this at all. Doing absolutely nothing, so not interested at all. That is a bearish impulse candle on weekly, of course, so you might be updating your weekly chart a little bit over here to take that into account. So just do that. It's not really going to change anything. If I'm not doing these weekly reviews, quite frankly, if the instrument is not really tradable, I kind of ignore it and don't even bother so much with the analysis. All right, so Euro Cad, we did get a bearish breakout on Friday, thanks to non-farm. It's the only one, I think, really, but certainly so far. So there's that bearish breakout. If you don't require a valid M pattern, because this is clearly not a valid M pattern, then you know, you could potentially be looking to go on this. So so far today, we're just in pullback mode, which is good. Nothing wrong with that. And as long as we stay outside of the channel, and you can see so far in this current 4-hour candle, it's respected that resistance level pretty well. So this is definitely something that you could be looking to short this morning on an H4 impulse. Euro Oz, total nothing burger. You can see how it respected that resistance level perfectly. If you were trading our new overlay, then nice little winner over there. But otherwise, yeah, this is definitely not suitable for core strategies. And you can see even here on weekly, deep inside of the channel. You know, effectively, I think if you look at this on a monthly time frame, this is basically a retracement wave. So I'm not going to say that that means we're going to have a rollover in a bearish phase 1 on monthly, but we can have a quick look at that. So you know, here you can see bearish impulse wave, bullish retracement wave, which is what we currently have, and it's coming up to this old resistance level. So not that we trade these higher time frames. Personally, you know, I don't, but it is interesting that we're coming up to that resistance level. Let's see what happens. Yeah, in any case, that's taking the long view. Last of the Euro crosses, Euro Kiwi, last week, nothing for us except that it confirmed that as a false breakout with a lower high here and rolled right over on Friday, of course, with non-farms. That would have been a setup also for overlay. I just want to see what I was thinking over here as well. Oh, this is all overlay stuff that we're testing, so I won't bore you with that. But in any case, it's definitely not tradable in terms of our core strategies. Okay, so Gbp Swiss, similar story here, where we've had a lower high last week. So just rolling over, staying inside of that channel where we've got confidence with both the 3 and 4 wave channels. And also here, as you can see, on weekly, it's just absolutely flat. So not even interested in this low 30. That is a ringed high though. So again, you can see, because I'm not really interested in these pairs, I'm not really updating all of the analysis, but if you wanted to make sure that they are updated, there you have it. Gbp Cad, so we saw with the Euro Cad, we had that bearish breakout, but not on Gbp Cad. So it did come down to around the support level. But so far today, obviously, now I've just seen this for the first time, I see that it seems like it's not even going to really test it very much more. So absolutely nothing for us to do here at all. And as you can see here as well on weekly, not at all interesting. And Gbp Aussie, we did look at this for a hybrid, I think it was, or even potentially a daily impulse, because, oh no, I beg your pardon, talking absolute nonsense. This over here obviously has come to an end. last week's inside bar. Okay, so if we're treating the inside bar as a continuation, then you would not have this additional wave in here, which is why I should just leave it like that. So technically speaking, this trend is still intact. It hasn't yet come to an end. So this has remained outside, so it's continued to respect this support level. And it is an outside C close as well. So this inside bar then potentially giving us the go ahead for a daily impulse. And we are in a pullback here. So those of you who are looking to take hybrid trades on this already grabbed an entry. So far, using our 2 5-step rule, yeah, we're still in this one. It's just languishing. It hasn't really done anything. We did have an overlay as well on this, which has hit take profits, I think. Actually, no, we had a multi-time frame loser on this on an overlay, but if you're using single time frame, it'll still be in it. In any case, that's GBP Aussie. Keep an eye out for that. That is a potential setup for a daily impulse for this week. GBP NZD, yeah, so on a daily time frame, another lower high, rolled over, come straight back inside. It's really inside of the channel. Here on the weekly time frame, we did get that breakout, as you know, but it has closed back inside. So technically, this is still a potential trend. We have not yet had a breakdown in sequentiality of cyclicity on this time frame, but it is inside of the channel. So there's no strength here at all. So regardless, at the moment, whilst price remains inside of the channel, we're not interested in that. CAD Swiss, respecting resistance, just chopping sideways. Absolutely nothing for us to do here at all on either time frame. Aussie Swiss, yeah, we had that previous test. We spoke about this last week where any bearish trades were stopped out on this. We did have that winning overlay, which we would have spoken about. I see another setup for overlay probably this morning on this, especially if you're using multi-time frame. I don't have the analysis on that, but in any case, that's all well and good. Nothing for core strategies on this at all. So don't worry about that. And on this time frame, we've actually had this low ringed last week. So we are now into a bullish wave on weekly. This close, let me just double check that, 059 compared to the low 08. So that's right. We did have a lower close, didn't we? So at the moment, this technically is still a trend. Until we get a breakdown in sequentiality of cyclicity, this bearish wave just made it as an impulse wave. So had that been much higher at all, we would have had phase 2, but in actual fact, that is a phase 1. So technically, we are in a phase 2 at the moment. If it comes up any further and closes above the previous wave high, then we'll have breakdown in cyclicity. Or obviously if we get phase 2. But at the moment, that's still open. And regardless, it's deep, it's inside of the channel. So it's almost, you know, one can almost disregard that unless we get a proper rollover and we get the market closing properly outside of that channel again. But here on the daily time frame, you can see that really it's just respecting the support area very well. Right, Aussie Cads. So we had that test on Friday, tested our support level over here. I'm seeing now for the first time, we had a bit of a gap over the weekend, but coming back up at the moment. It's still early in the day, but nevertheless, so I put in this little dashed line over here on Saturday, just because that is quite a significant test. Not only that, just coming back to our discussion around quality of waves, you know, if this was going to be, and I just want to remind you that here on the weekly time frame, we do have an outside C close. We are in a technical phase 1 here. It's not yet confirmed because we need to have that lower close, and that's the lowest close in this wave. But it is an established trend. We're on a technical phase 1. But should this low be ringed, then it's phase 2. And that would be the end of that trend. Now, I'm not saying that is going to happen. We don't know. But technically, we are in a bearish trend on this. And of course, that meant that for the last while, or certainly last week, we were looking for a bearish impulse candle here post pullback in order to short this market, but we didn't get a single one. Not one of these candles was an impulse candle. And you'll remember my discussion around the quality of an impulse wave, and how looking at the proportion of impulse candles as a percentage of the total. So if you've got, in this case, we've got 1, 2, 3, 4, 5 candles in this wave, excluding the first one. So of those 5, none of them was an impulse candle, not one. So that is extremely poor quality and is actually indicative of what is more likely going to be a corrective type wave. And then we get the failure on the support level, which is quite distinct low test there. And if you look at the lower time frame, the question is, has cyclicity broken down? Well, it actually hasn't yet, but actually it has. There we go. So this morning, we have had a breakdown in cyclicity. So this over here, even if you ignore the fact that we did get a lower close over here, it's actually the next wave. So phase 2, and now we've got a bullish phase 1. So there you have it. That technically, if you're using 2 time frames, that wave is already over. But now if we look at this candle, if it does not roll over and make a lower low, which it doesn't look inclined to do at the moment, but as I say, it's early in the day, then this low is already ringed, in which case this bearish wave is over, and we enter a bullish wave, and that's that. So hopefully that helps you guys understand this thought process a little bit better. Right, Aussie Kiwi, as always on weekly, we're still doing nothing here, but on the daily time frame, we had some bearish movements through the course of last week, and obviously this is a bit far removed from non-farm payroll. Interesting that it's coming back today. Aussie strength showing itself here across all of these pairs, but yeah, it's still very much inside of that channel, so it's not something that we'd be interested in as far as that's concerned. And yeah, I'll be showing you guys the dual time frame overlay next week, but there was a nice winner on that last week. And Gbp Swiss also doing nothing. That's there, I guess, for a reason. Okay, more of those overlays. One loser, one winner on dual time frame overlay. Let's get that out of the way, because otherwise, as far as the core strategies are concerned, our impulse strategies, there's nothing doing there at all. And as you can see on the weekly, likewise. But a bit more interesting, as you know, on the Kiwi Cad on weekly, just to expand that a little bit more. So remember that discussion around quality of impulse wave. So this is an impulse wave, but it was a pretty scrappy one. I think maybe I had to redo this chart in a rush and I haven't done it properly. Yeah, absolutely. So I'm sure Muna will correct me, thanks to others. But in actual fact, this has moved along somewhat. And not only that, this is a case where we also have now got an end to the trend. So there we go. So regardless of anything else, never mind the channels, but you'll be inside of the channel now. You can see that this bearish wave failed to close below the previous wave low, and it is now a ringed low, and therefore this bearish trend is over. And that's that. So this will all need to be updated as well, but that'll be the 4-wave channel, the bottom of it anyway. So this support level continuing to be respected, and of course on daily, that's what it looks like. You can see very strongly respected over here. It's been bouncing along on the support area now for a couple of weeks. So all of that bearish stuff is done and dusted. Yeah, and there's nothing really else to say about that. So that's it across our 28 currency pairs. I don't see any questions having popped up for me. So unless you folks do have something for me, that's pretty much a wrap. You can see that for the week ahead, there are a couple of possible trades. There's nothing really fantastic about the market at the moment. You can see that even those where there are potential trades, it's a bit borderline. But if you have a rule set that's a little bit more on the aggressive side, those are valid setups. If you're on the more conservative side and requiring outside C closes, I don't think you actually have anything to go with at all at the moment. So here we sit with a really quiet market. Let's hope that it picks up, and certainly that it picks up sufficiently for our bootcamp next week. So just on that topic as well, next week, Monday, we will be kicking off the bootcamp with our market review in the morning. And then we will be doing an evening session as well, Monday evening, just to have a look at updated charts for trading H4 Impulse from Tuesday morning. And then Tuesday morning, we will be starting Central African time at about 6:30 a.m. So just to be in time for the close of the second H4 candle. And have some breakfast and coffee and reconvene during the course of the morning for some additional discussions. And then likewise the evening again, and then same thing on Wednesday, 6:30 in the morning for an initial check of the charts for our H4. Mid-morning, we'll have another chat, and then evening again on Wednesday. So 3 days where we will be spending time together. Thank you, Corinne. She has just popped the member link for joining the bootcamp. If you haven't done so already, we've had a couple of people who can't make it, so there is a little bit of space left for anyone who hasn't yet joined. So we are limiting it, as I've mentioned before, to 25 people. So that's all good from my point of view. Time for evening trading from Dina. So flexible in terms of what you guys want, but I normally do it around 7:30 to 8 o'clock. So we'll do it around that time. So you can have some dinner first, and then we can update our charts. And that's it. So 6:30 a.m. Sinji, Central African time. For as long as it takes, so how long does it take to have a look at the charts, to place H4 trades, also to have a look at any trades that might have triggered in the at the midnight close, excuse me, and 4 a.m. close. So that's 8 a.m. broker time. So we'll be looking at any trades that kicked in earlier, but also just make sure that we take any valid trades on that candle, and as long as that takes. So what's that going to take us? I don't know, about 45 minutes, maybe an hour. So yeah, 6:30 to 7:30, call it that. And then, as I say, mid-morning, we'll go again after we've had some breakfast from, let's say, about 10, because that sets us up for the 11 a.m. candle close, well, which is midday broker time. So yeah, that's pretty much what we're looking at the moment. We will publish these times through the course of the week. Right. Thank you, Gary. You too. Any other questions, folks? Hope that's been useful. Pretty quiet at the moment. If next week's dead, if it really is dead, then we will just reconvene. To be honest, we'll just put the bootcamp back until market conditions are a little bit more interesting. Normally it's still okay this time of the year. I suppose we are getting closer to August, but yeah, I mean, there's plenty for us to talk about in any case. So as long as we have reasonable trading conditions, then we're going to go ahead. You're welcome, Surprise. You too. Have a great week, and I'll chat to you guys later. Take care. Bye for now.